Hello, dear students. So let us understand about long-term sources of finance. So sources of finance, again, it is the procurement of finance from various other third parties for whereby by collecting that finance, you can able to start a new or else you can expand in business. So this is the concept of sources of finance, procurement, gathering, collection. So we can say this is in any of these terms. So where this sources is broadly classified into two, that is one is short term, another one is long term sources of finance. So long term. So basically this kind of finance, we can say this as fixed capital or long term. So where it is going to survive in your company for a very long time period. Say for example, land. So it is not, such a small payment where you can able to purchase just like that. So such a huge payment is necessary for this land. Similarly, building, similarly, machineries to do the production process. Okay. For all these things, huge payment, huge cost is required, whereby in case owner's fund is not sufficient for starting all these things, for gathering all these things, obviously the next idea is that we can able to source from the outsiders. So by means of collecting funds, such a huge funds, by combining both owners as well as outsiders fund, so this fixed capital, fixed assets is what rising, right? So this is the sources of finance. Now let us see the different classification of sources of funds. So basically on the basis of periods, on the basis of ownership, on the basis of sources of generation. So let us understand all this long term alone. Since we discussed about this short term in the previous videos, now let us understand about short term sources of finance. So short term, long term. So what is this long term sources of finance? So it requires long period of time, and no, the maturity date for its repayment, it is also very long. Duration is what very long. So yes, obviously shares. It may be either equity shares or else preference shares. Shares comes under the category of long-term sources of finance. So when we release shares for a company, if at all our fund is not sufficient, owner's fund is not sufficient, so the next step, next idea that he'll think about releasing the shares. So where whoever is interested to purchase the shares of the company, of any popular company, so that people will become as shareholders, right? So for that shareholders, for all those shareholders, so where we need to give, owner, he has to give dividends on a regular basis. So shareholders fund, by gathering such a huge fund, they can able to do the expansions or any other changes inside the company. So if it is owners fund, then that is called as equity shares, or else if it is from the third parties, we can say that as preference shares. Retained earnings, in the sense if the dividend is not distributed to the shareholders, the company itself holding the all the dividends within the company, then that concept is called as retained earnings. And again, why they are doing that retained earnings? Like if they want to do, if they want to go for any expansion project, obviously this retained earnings fund will be helpful for them. Anyhow, they need to return the dividends to the shareholders, that they'll convince their shareholders and they'll return it later. Okay. And next is what? Debentures is kind of another form of sourcing the finance from the companies. We can also say this debentures, bonds. There are different concepts like debentures and bonds. Debentures is something that companies will be releasing the debentures. Bonds is something that government will be releasing the bonds, where risk is what very high in this debentures, since it is released by private companies. Whereas bonds, government is releasing. That's why risk is what? It's completely risk free. Okay. So again, it is also the another way of sourcing the finance for such a huge fund. Right. And next is what? Any financial institutions long-term loan. See, many long-term loans, like you'll be paying for 5 years, you'll be paying for 7 years, 10 years, for long period of time. Okay, that kind of loans, that kind of any financial institutions we may be approached for that kind of long duration which is taken for this loan period. And we can also say all these things comes under the category of, see here in the concept of external sources. All the external sources like public deposits. See, public deposits in the sense, instead of depositing in bank, okay, you'll be get a chance to deposit in any companies. Probably they may give some high interest rate, even more than the bank sometimes. Okay, that is also another way of sourcing the finance. Okay, so these are all the different concepts of long-term sources of finance, but the ultimate aim of every business owners for taking both the short terms as well as long-term sources of finance is to two major objectives are there. One is profit maximization, another one is wealth maximization. The ultimate aim is first step after getting profit, and next is to increase the wealth of the shareholders. That is what the major objectives for that particular cause. So all these things are happening in all the different kinds of decisions. Like, see, this sources of financing, I mean funds classification, basically it comes under financing decision, where to procure, where to source, how much to source, from whom to source, right? How to source, all these things. So all kind of these decisions, see whether I'm approaching for, whether I'm going for public deposits or I'm going for loan from banks or from financial institution, what kind of decision that any company is going to take, it depends upon their situation, right? Whether they are going to give more preferences for their preference shareholders, right? Or else they are just interested to release in the form of debentures. It depends upon the situations of the company, time of repayment, maturity date, all kind of certain things. So this is all about the sources of finance, particularly now we discussed long-term sources of finance. So thank you all.